All right, there. Now we should be good. Man, it's been issue after issue this morning, but everything is looking good now. So let's go ahead and get this stream started. It is 11:06 a.m. Eastern Standard Time on Friday, August 12th, 2022. Welcome back to the channel, Crypto Trend Trader, with our weekly market wrap up. If you are just tuning in, remember, please, as always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, if somebody could just let me know in the chat that everything's coming through loud and clear. What's going on, Sotos? Good to see you. All right, so the last couple days we have been plagued with just random issues. Just had like some random technicals here, so sorry about the delay. And as of now, TradingView is still acting a fool. There was like some serious issues with TradingView in my region yesterday. Basically just like went dead. Like all the inputs stopped working. So essentially every chart was just like frozen with the exception of like two. And if you try to reload them, it just like forever loaded. So I'm not sure what's going on with TradingView. Obviously, look, here's the thing about TradingView, okay? It works. When it works great. I like it. I like everything about it. I write my scripts on, Pine Script, TradingViews, situation, the whole deal. Been using it forever. The problem is they make a lot of updates and it seems like it never gets better. Or when it does, it's like, oh, cool, they added a feature that I'll probably never use. But man, they are just forever struggling with everything. So as of now, they're still having some issues. It is what it is. We have enough charts loaded up that, we can do some TA. But, we also had that extremely long stream on Wednesday night / into Thursday. So we'll probably do a relatively short one today. Of course, I say that, but my ability to do anything under like 2 hours is pretty much impossible. So hopefully TradingView limiting our choices of charts that we can look at today on top of the long stream on Wednesday. We can go ahead and do a short one today. So, but anyway, we've had a pretty good week in the markets, pretty good month and a half, pretty much in the markets as expected. But now what we need to pay attention to is, what's to come. So the real question is, obviously we saw a nice move in risk on assets, cryptos, all that stuff. But we want to really just zoom out and take a look at what's going on here and see, like, when is the time to take profits? When is the time to get bullish? When's the time to get bearish? How do we beat these markets consistently? So that being said, we're obviously getting ready to wrap up our daily candle, whatever, the weekly candle. And then, we're into August. Typically, not the best month, August, September. Although we have seen bottoms in like some serious asset classes in the past. So we don't want to mark it out, but we want to keep everything realistic. So let's start with TNX. We've been deep depth on TNX, on treasuries, on Fed funds rate, on all this stuff recently. And look, right now, the daily chart for TNX, it looks bullish. I mean, there's nothing else we can say about this. We have officially left the bearish control zone. We have a hard buy signal. We have a bunch of green histograms in a row. We're approaching the slope line and the zero line. So it's the beginning of bullish. The 8 and 21 are about to cross to the upside. We're above the 200 exponential and simple. So if we just figure out how do we identify trend? Well, two blue lines. So bull trend. That's good. What about on the shorter time frame? Well, when the 821 cross back green, that identifies the shortest, the 821 moving averages. So we're basically getting ready to confirm back into, we're in a bull trend. We were just in a correction. So when we're above the blue lines and these flip red, it's a correction in an overall bull trend. When we're above the blue lines and they flip green, that's a resumption of the bull trend. So right now we're getting ready to begin the resumption of the bull trend. And please remember also, this is while everyone's calling for rates under 2% and blah, 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 blah. When we know that the Fed has come out and said multiple times, we have their projections for, by the end of 2022 and 2023. And we know that, we should expect another 1.25% by the end of the year. And with 3 meetings left, I mean, what is that going to work out to? Is it 50-50-25? Is it 50-50-50? Is it 75-50-0? I mean, we don't know. But I would assume, base case, that we get 50 in September, 50 basis point hike. So then what is that going to look like in these markets? What is that going to give us, a clue on anything, direction, etc.? So looking at the weekly on the 10-year, TNX, we can see we had the hard sell signal. We left the bullish control zone. But what I'm paying attention to here, and what we see this type of situation play out over and over again, and when you actually look at it and you see what's going on, and you realize how simple it is and what the market is trying to tell you, you like almost want to like slap yourself for not realizing this sooner. And you wonder, man, why doesn't anybody ever talk about this? Because this is a big freaking deal. So one thing we always talk about on this channel, always, well, I mean, we talk about the same things over and over again, but that's important because consistency. But some of those things are obviously trend. Trend is very, very important. Why is it important? Because when we trade with the trend, it increases our probability of success. It gives us a clear, definable edge over the market. The market is bullish, therefore, if I take bullish trades, I have a higher success rate. The market is bearish, therefore, if I take bearish trades, I have a higher success rate. Can we trade against the trend? Sure. Sure, but we have to trade against the trend knowing that our probability of success is diminished. So that being said, here on the weekly, whenever the 200 exponential crosses above the 200 simple, that's the beginning of a very, very strong bull trend. Because now the 200 simple is below the 200 exponential. The 200 exponential is blue. 200 simple is just basically flat, so it could flip back to blue at any point in time. Could be this week, could be next week, could be in a few weeks. But we know as long as we're above them, it will flip blue. So at this point in time, Treasury yields literally have to do nothing, and they're bullish. So now I want to talk about what nobody talks about. We always talk about divergence as well. And what is the idea behind divergence? Well, obviously, another very important topic that we always discuss on this channel is confluence. And what is confluence? Is when, multiple things are telling you the same, giving the same truth or clue or however you want to call it. So what we look for with confluence is essentially what's happening with price and then what's happening with our indicator oscillators. Now, sometimes price tells us one thing and both indicator oscillators, whatever, agree. Sometimes price tells us something and one of them will disagree. Sometimes price will tell us something and these two will tell us the opposite. So what we're looking for, once again, is that confluence between our indicator, oscillators, the trend, all that good stuff. And then see how it lines up with price action to see, do we see a divergence? Do we see one of our data points diverging from the rest, telling us, hey, there's something going on here? And essentially what we're looking for with divergence is, are we spending too much energy in relation to the price movement we're getting? Or are we spending too little energy in relation to the price movement we're getting? Or are we spending just your average run-of-the-mill energy and everything's normal? So the way we do that, obviously, is by looking for divergence and by looking at, the indicator oscillators. Because what they do is, essentially, they just basically oscillate between two levels. We have the 0 level, we have the 100 level for the stochastics. They bottom out at 0, they max out at 100. So basically, it's just range bound all the time forever. And that's, obviously the purpose. But the truth is, and I am actually working on a video right now that's going to be awesome, I think, for a lot of people. But it's basically talking about range trading and how to identify the ranges and which type of range is the most beneficial towards which type of trend, and where options fits in and all this, and time analysis, putting an extra factor in, all that good stuff. So keep an eye out for that one. But in the meantime, we're going to talk about it right here. So essentially what we're looking at is price action always going to trade, freely. Sometimes it'll be locked up within a range. But our indicator oscillator, like the stochastics, for instance, will always operate within a range with a maximum of 100 and a minimum of 0. That's not the case for the TDMACD or something else like that, where it can literally get to just insane levels, or it can go extremely low, but there's no top or bottom. So it doesn't actually oscillate within that range in the same way. So the idea being that maybe the market is going up, but as it goes up, it's going to breathe in, and then it's going to breathe out, and then it's going to breathe in, and it's going to breathe out, and it's going to breathe in, and then it's going to breathe out. And the idea is that if we look at our oscillator and how it moves within the range, and then we look at our price action, and then we look at our trend, we're able to identify essentially, are the up moves when we breathe in going to overperform the down moves when we breathe out? Are the down moves going to overperform the up moves when we breathe in? Or are we just going to take normal breaths in and out and just go sideways? So essentially, when we identify the bull trend, we say, okay, likely when we take a breath in, we're gonna move up a bunch, and then when we breathe out, we're gonna come down a little bit. So we're gonna move up a bunch with the trend, and then we're gonna exhale, and we're just gonna consolidate and kind of go sideways or down, and then we're ready for another big breath. And where does that breath take us? Well, it takes price action back to the upside aggressively. So now here we are on the weekly, and we can look at basically a couple data points that we had. So here we obviously enter into the bullish control zone as we're flipping the trend, bullish right here. We're in the bullish control zone. We exit the bullish control zone. So here we're in the bullish control zone, and we're at about $1.71 or 1.71. And then we breathe out, and we come all the way from the top of the range all the way into the bearish control zone. But where does price action go? It goes nowhere. It goes sideways, slightly down. And then we take another breath in, but it's just a little baby breath. We don't even put in a new high right here. And then we breathe out again. And what happens again? Well, when we start, we breathe in, we breathe out, higher low. We breathe in, we breathe out, higher low, but lower high. And then we breathe in, and oh, new highs. And then we breathe out, and then look, higher low. So we can tell, obviously, the trend is switching to bullish without even having our moving averages or anything like that. We could tell, obviously, when we take a breath in, you see how long the green area is, and we take a breath out, we see how little the red area is. And that's what we're looking for. So here we were very close to showing that red, to flashing the 821 weekly bear cross. But obviously we're above the 200 exponential and simple, so we're in a bull trend. We're confirming into a bull trend, the beginning of a weekly bull trend. So very powerful, and we expect to get quite a bit of follow through in time. So we see we went up a bunch, but we've barely gone down at all. As a matter of fact, we're reclaiming the 21. If we close this week right around where we're at now, we're at resistance, but arguably, I mean, we could just start up again next week, and then boom, we're confirmed bullish on the 821. We're confirmed bullish on the 200. 200 simples ready to flip back over. Indicator oscillators now have trended all the way from the bullish control zone, up here at 98, almost maxed out. And then we have rolled over, and now here we're down all the way at 31 on the blue stochastic. And where have we gone? Nowhere. We just went sideways. This looks to me like a bullish reset before continuation. And the same thing right here. We saw bearish divergence between these 2 points right here, these 2 green points. Price action was here, and then it went higher. Indicator was here, and it went lower and put in a lower high. So we see a higher high on price, a lower high on the indicator oscillator. Same thing with these stochastics here as well. So that basically tells us, okay, there's some bearish divergence. Let's see what happens when the bearish divergence plays out, because it's counter trend. It's likely to underperform. So here we see the bearish divergence taking place, and almost nothing has happened. Does that mean we don't have another flush down? No, of course not. But it looks like, with how much energy we've used to basically just go sideways, because here we were basically, this is where we topped out right here. This was our top on the indicator oscillators on both of them. And where are we at? Well, we're at the same place. We're at the same place. So yeah, we went a little higher afterwards with divergence, but then after that we went down, and then we came back up a little bit. And where are we at? Well, we're back at the same place. But the difference is we're not at 98 anymore. Now we're at 33. So what happened? We refueled the jet. We're ready to take off. And the same thing here with the TDMACD. We were up here at, and again, this thing does not have to stay within a certain boundary, but it's at 0.345, and now where are we at now? 0.12. So in all actuality, what happened? Well, we went sideways on price, and the indicator oscillators trended down. So when they decide eventually they're done exhaling, they're done breathing out, when they take that next breath in, what is likely to happen? Well, we could get one of these little pathetic breaths that basically does nothing. We get a lower high and a higher low. So it's just nothing, gives us no useful data points. Just whatever, a little blip. But then, if we don't get that little blip, what do we know? Well, we know when we take that big breath in eventually, after that little breath out, we're going to probably go much, much higher. So is that going to take us up to, new highs? Probably 3.5. Does it take us up to 5 and we start, violating key levels from longer term time frames? Probably. Right now we have a cluster of resistance from these previous 2 pushes up here, over the last like 10 years. But after that, once we break through there, there's not a lot stopping us from, eventually moving up to like that 5 level. We have a couple little peaks here, a couple little back tests, but realistically, that's our next swing high on longer time frames. So essentially what we're looking at is we're just waiting. It looks to me, when I look at this chart, it looks to me like, hey, it's just a matter of time. We're confirming into a bull trend on the weekly. All we have to do is not get cut in half. And as a matter of fact, on the shorter term time frames, it looks like we've actually just about finished that exhale, and it might be time for us to take another big breath, taking us much higher. So essentially, by identifying the trend, by looking for not only specific like divergence points, like a divergence rejection, like we see here with bearish divergence, we're also just looking for the overall posture and levels of interest of these indicator oscillators as well. And again, just think of it like that breath. A big breath in, a little breath out. A little breath in, a little breath out. A big breath in. So, are we going to get a little breath in, little breath out? Sure, we might. But then after that, we're probably going to get another big breath in and another little breath out. So that's what I'm looking at. Again, nothing has really changed right here. If anything, this has just gotten more bullish lately. And then we go to the monthly. We're still in the middle of the month, so not a lot really we can go by so far. But again, we have reclaimed the 200 exponential and simple for the first time in like 40 years. 200 exponential is blue, 200 simple is flat. We have broke through key resistance, back tested that resistance, and assuming this resistance holds for the next few weeks to the end of the month, and then possibly maybe next month too would be nice, or maybe if we just get some continuation, a new monthly close, high above 2.97, call it 3. We likely get continuation. We do see we're in the bullish control zone. We do see we're starting to lose a little strength here. We do see an aggressive knife stab up. So it's worth paying attention to. All green histograms, blue slope line above the 0 line. Very, very powerful trend beginning on the monthly. Very, very powerful trend beginning on the weekly. And then actually the daily was looking a little for a while there. And the weekly was like, well, if the daily keeps selling off, we may actually go lower. But now here we are and the daily looks strong again. So essentially the daily was all the way up here at, that 0.165 level. And that was right around here. And then since then we went a little higher, we went a little lower. And where are we at? We're at the same place. Well, here we were all the way up here on our indicator oscillators. We were all the way up here on our indicator oscillators. And now through that time, just going sideways on the daily, where are we at now? We're at the bottom of the range. We're at like more neutral areas, etc. So we basically just had a bullish reset. Price went sideways while the indicators oscillators reset. And now that they're at the bottom of the range, when they do decide to turn back up, which they're starting to do now, that means we're refueled. The jet is ready to go. So that's what I'm seeing on TNX. And again, obviously none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. But I would just be very, very cautious of all the people out there saying how great an opportunity the bond market is now. Now's the time to buy bonds. We've never had an opportunity like this. This is the beginning of a 10-year bond bull market. I'm just hearing all this stuff over and over again. And it's like, oh, I'm sorry. We were just in a 40-year bond bull market and we're literally breaking out of that. So is it crazy to think that maybe bonds aren't the best trade for like 2 years or 5 years or maybe 10 years after like 40 years of just a reckless, ridiculous mouth up bull market? I mean, I would say it's probably worth paying attention to that, potentially people's portfolios, maybe 40% of them, maybe 50% of the portfolios, maybe 30%, depending on what allocation. A lot of people are running 80-20s. Some people are running zeros. There's a strong possibility that bonds are going to underperform horribly and stocks could underperform as well. So it's worth paying attention to, because with a stock, you can go into a stock, you can buy a stock, you can sell a stock whenever you want. But if you get involved in the bond market, it's not the same, because you either have to be locked in for that rate or potentially have to sell and take the L without knowing what's going to happen going into the future. Now with the stock, you can always buy it. It can go up, it can go down, but you're not locked in that same way. And it's worth paying attention to. And we're actually seeing that reflected, obviously, with the inversion of the yield curve. So on to our stocks. So we're going to look at the 4 major indexes. I switched over to, I have used, obviously, S&P, SPY, Dow Jones, DIA, all different tickers for quite a while now. I think I'm actually going to be using the spider ETFs, just because I think it's a little more useful to people using like the spiders, SPY, QQQ, DIA, IWM, etc. But realistically, and most of you guys probably already know this, all it is just it trades at like 10% the price of the actual like ETF. So, you know, if we're looking at basically the SPY, it's trading at 423. Obviously, you know, if you look at the S&P, it's trading at essentially 10 times that. So it'd be 4,236 or whatever. But I think this is more useful to people because when they're building those core positions in their portfolio, you know, most people aren't just dropping like, you know, like 30, you would have to drop 33,500 on the Dow. So, you know, instead you can pay 335. So you can get like essentially like 100th of a share, so to speak. So, so that being said, we're going to go ahead and just jump in from those. But I think going forward, I'm going to use these ones just because I think it's a little more applicable to people. So, so we have so you'll notice obviously a bunch of like drawing tools are gone on the charts that we changed, but you know, it's nice to kind of delete them and just start over anyway. So, all right, so what have we been seeing? Obviously, bull trend coming to a conclusion, or at least looking like it's rolling over. Back test, new lows, back test again. So what do we need to see out of these markets to suddenly be bullish? Well, there's two main things that would need to happen for us to be bullish on these charts. We need to get back above the 200 exponential and simple, and we need to flip them bullish, which means they need to flip blue, which means they need to have a positive slope. We see the 200 exponential already happened. We're headed up here to maybe back test at 200 simple. If that flips blue, you know, technically we're above the two of them. You know, we're not super bullish until the 200 exponentials on top, like we were just talking about. But, you know, at that point in time, you know, then we start saying, okay, we flip the trend back blue, the 200 exponential and simple, both blue. Now what do we need to look at? Other resistances that could be in the way, like previous peaks. So we have two key things on this chart that tell us about trend and what to expect. So obviously the 200s are blue through here, they're red through here. So trend is bullish, trend is bearish. And then we have a high, a low, a lower high, you know, lower low, etc. So what we need to see now is we need to basically see this high, that low, this high, and then, you know, arguably that's our low. And then this is just part of this move down. We need to see the price action come up here and take out that previous swing. So it's undeniable that we have a high, a low, a lower high, a lower low, and then a higher high. And I mean, if we get up to here and put in a higher high from this point, I mean, let's be real, we're going to retest the all-time highs. And if we retest the all-time highs, I mean, something changed in these markets to all of a sudden be bullish. So I guess QE's on or something like that, at which point in time, you know, then we go into a melt up and, you know, we hit all of our upside targets essentially. For like our base case or our bull case, but there's still a couple up there for like our super bull case. So maybe we'll see some of those fib extension targets get hit. But we know that bear trend has flipped based on the moving averages, and we're still in a bear trend based on lower highs and lower lows. So the two key levels to watch for S&P are 432 and 461. And if we break through those two areas, I mean, look, it is what it is. We can say whatever we want. We can talk about fundamentals as much as we want, but we have to trust the market. We have to trust our technical analysis and the trend and everything. So, you know, if every time we see a flip from blue to red, we say, well, I don't know if I believe it, and we don't trust it, what's the point of using that? And if every time we flip from red to blue, we say, well, I don't quite trust it, what's the point of using it? So, you know, on a situation like this, where we have just broken down and then we come up and put in a lower high, we're kind of neutral, but still bullish here. And then once we break down, at some point in time, we have to say we fully trust what's going on here. So sure, maybe this looked like it was going to save the trend. And maybe you enter back into this when we reclaim the 200 exponential and simple. And then maybe you get taken out when we lose the 200 exponential and simple. So you take a small L right here on this. But the point is not to avoid ever taking small L's. The point is to make sure that we never take a big loss. So if we can manage to avoid all of our big losses, and let's just say we have an equal amount and dollar amount of small gains and small losses. Well, they cancel each other out. So now all we have is the big losses, which we've avoided with stop losses and mitigation tactics. So then if we have no large losses and the small wins and small losses basically are a wash, cancel each other out, well, then what's left? Big gains. Big gains. And that's what it's all about. And sometimes, you know, we might handicap ourselves by taking profits at key levels, like resistance or something like that. And you say, well, if we just go parabolic now, we'll have missed out on some of those big gains because we took profits. Sure, I don't ever expect a position I open to be still open at 100% after big gains take place. I will be taking profits along the way because the truth is, no matter how lucky we get or how good we get or what methods we use or whatever, we're not going to be able to consistently call tops and bottoms over a long time frame. Now, obviously, we have devised an indicator and a system that does phenomenally well at that, but it's one of the most risky things you can do. I mean, trying to pick a top or a bottom is extremely risky, the same way that just buying a breakout is extremely risky. Probability says that you will be wrong. If we're going to bottom out or top out one time in a year, if we're going to say, okay, let's identify the lowest low of the whole year and the highest high of the whole year, but let's do it in real time during that 365-day period. It's going to be extremely unlikely that, you know, if you only get one guess and we say, okay, during this 365 days, we're in, you know, day 81, and we're like, all right, this is it. I'm calling the bottom. What's the real probability that we're going to be correct? I mean, 365 days in a year, right? So what is it, 1/3%? I mean, that's horrible odds. That's horrible odds. I wouldn't say that's an edge at all. You know, based on just the likelihood of just randomly picking a day. Now, can you improve that by using indicators, oscillators, all that stuff? Sure. But it's very, very hard to pick a high and pick a low. And that's why it's so important to, you know, buy key support levels and sell key resistance levels and trade with the trend, and then eventually be right and start taking profits off the table in case you're not right. Because the truth is, oftentimes, I mean, think about how many people here, we broke down, we confirmed the bear market, we go to new lows, and everybody just expects us to just go straight to zero. But how were we able to identify the exact bottom? How are we able to identify key target levels to the top? How are we able to identify the potential top of the trend? Well, with all of our tools. So the more tools we have, the more effective they are, the more we practice with them, the more we rate them personally on how, you know, high a likelihood of success they are, how reliable they are, et cetera, you know, the better our technical analysis is going to get. And that's what it's all about in the end. So let's just look at our weekly chart right here and see what we're getting. So we bounced the 200 exponential perfectly. We front ran the 200 simple, which, I mean, that's definitely bullish. Definitely surprising too. I really thought this was going to roll over and come a little lower. But one thing that was, you know, a clue was the S&P and the Dow were staying strong at the 200 exponential. The NASDAQ and the Russell were like capitulating below them. So if you average it all out, which, I mean, I'm not trying to cherry pick data, but if we average it all out, we basically, all of them came down to the 200 simple. Just the strong ones front ran it slightly and the weak ones overshot it. And that makes sense because that's typically what markets do. The strong stuff will overshoot. The weak stuff will, you know, overshoot to the downside or undershoot target levels. So here on the weekly, you know, we're very, very close to the 821 cross, which is definitely a huge deal. Obviously, we closed the weekly today. This was a strong week in the markets, consolidating above the 8 and 21, ready to have a cross back up. That is definitely a good sign. That is definitely a good sign. What we want to pay attention to is, do we see false alarm? Here we got the breakdown in 2015. Here we came up to a new lower high right here. We got the cross to the upside. We consolidated. This was clearly distribution taking place in hindsight. We broke down. We put in a lower high, and then we went to a new low. Is that going to be what happens in the stock market, in the S&P? Are we going to retest the 200 exponential and simple? Are we going to come down here and revisit the lows, possibly even take out the lows? Seems very, very likely. The market loves to put in a low, come all the way back up and almost put in a high, and then come all the way back down and put in a new low, and then have that new low actually just be like a tiny little wick, take out people's stop losses, and then be like, just kidding. So we don't know what's going to happen, but we know that's a probability of that happening. And then again, let's just look at, again, when these bull trends top out. You know, this was the end of our bull trend from 2007. We lost it. You know, we try to reclaim the 821 here. It rolls back over. We try to push back up. We get rejected. We come down here. It looks like it's all over. I'm sure people were super, super bullish. Bearish. this thing was going to zero. It was garbage. It was trash. Like, that was the end of the world, etc. And then what really happens? We come all the way back up, cross 821 back to the upside, cross 821 back to the upside, and then it's off to the races again. So it's worth paying attention to that we get these fake crosses and then break down sometimes. And then once we flip back over, how are we going to say, okay, that was actually it. That was the bottom is in. But it's worth paying attention to how often you see a breakdown. We come all the way back up and then we either slightly flip it bullish and everybody gets bullish again, or it doesn't quite make it and then we roll over. So does that have to happen? No, but it's worth paying attention to. Because if you really look at what's going on right now in the stock market, if you look at what's going on in the economy and you say, well, we're not in a recession and things are good and whatever, when it's all said and done, there is a direct link. And we know this. There's a 100% link directly between what the Federal Reserve does, fiscal monetary policy essentially, but basically, are we in quantitative easing? Because that's when we go up. That's when risk on is going on. Or are we in quantitative tightening? And right now, we know we're in quantitative tightening. The Fed is nowhere near pivoting. We had a fake little pivot rally. Everybody was like, the Fed's pivoting, the Fed. Literally within hours, we had a bunch of Fed presidents coming out saying the Fed is 100% not pivoting. Expect another 75 basis point hike. Matter of fact, we might go a whole point just to teach you a lesson. Like, they're not going to come out and say all that stuff on their own. Jerome Powell finishes speaking and he's like, that was a great speech. I'm a great Fed president and I'm a good person. And then afterwards, the market's just ripping to the upside and Powell is like ripping out his hair because he's thinking, what don't these people understand? You don't think that he talks to the rest of the Federal Reserve and then they come out the next day and say like, hey guys, I think you're just hearing what you want to hear, not what I'm saying. Because that's clearly what happened. And I mean, we identified it at the time, but the fact of the matter is we were already expecting this rally. So we were ahead of the game on this, but now we don't want to be the ones who come in, at resistance and say, well, now I think we're going to get bullish. Because the monthly chart's still very, very bearish. And all we really did just back test 821. And now we're trying to stop the breakdown. If we close our next monthly back above the 821, I mean, it's going to look bullish. And on shorter time frames, it's going to do all the stuff we just said. At which point in time, we likely just continue to go up. But if this starts to get rejected, if we start to close down here, if we close in between the 8 and 21 and just kind of go sideways, it's just going to basically be a little more inconclusive data as our indicators trend down. So could this turn into a bullish reset and then we go higher? Sure. It 100% could. So, we don't want to assume that we know the outcome one direction or the other, but we have some clear levels and some clear steps that need to take place for us to get bullish in these markets. Unlike other people that don't even know what's going to make them bullish or bearish, they just go with their feelings, their emotions, or all of a sudden just whatever the narrative is. And the truth is, when everybody agrees on what's going to happen next, usually the opposite happens. So everybody agrees now the stock market is bullish again and we're going to go up from here. A couple of people are still reluctant, but even the people that are reluctant are now being like, well, actually, we've been adding over the last couple of weeks. It doesn't look as bad. We actually are starting to get like a little bullish. I mean, that's what you want to hear. You want to hear all the people that were super bearish start getting bullish, and then it's probably time to be bearish again when nobody is. So Dow Industrial Average doing the exact same thing. So we know it's the exact same thing. We close above the 821 or the 200 exponential and simple on the daily. Starts looking good. We flip them bullish again. Starts looking good. We take out the previous high. Starts looking better. We take out the all-time high. Blue sky breakout. Let's go. Weekly chart. Almost exactly the same. Back testing resistance. Bounce to 200 exponential. Close to the 821. Flipping back to the upside. Bullish. Momentum on the weekly. I mean, obviously, after like a month and a half of upside, you would expect the momentum to look bullish. Same thing here on the monthly on the Dow. Very bearish on the indicator oscillators. Very close to confirming an 821 or 821 on the monthly. Bear cross. And then what happened? We back tested as expected. And now what's happening? Well, so far we're getting a little continuation. If we close back above that 8, it's going to look good. It's going to look like we basically have, averted the dump. We were like, oh, we saved it. Now here we came back down, tested again, and we saved it again. And then it was like, okay, now we're ready. That was the market coming back down, being like, hey, are we sure about this? Are we good? Can we put in a higher low? Are we going to go to the upside? All right. And then triple Qs. So same thing here. We basically came all the way back up. We have retested the 200 exponential. So the Qs had a nice move. The NASDAQ had a nice move to the upside. But when it's all said and done, what really happened? Well, it underperformed everything else. Percentage wise, it did great. But actual like posture wise, it did terribly because it's basically just at the 200 exponential, and we see everything else is in between the 200 exponential and the 200 simple. So this is a weak posture, which it has been weak ever since we started seeing weakness. We've seen lots of weakness in the NASDAQ. So again, very key levels to pay attention to: breaking above 343, breaking above 370, and then breaking above the all-time high. And again, when we look at our weekly, we bounce off of the 200 exponential, come down almost at the 200 simple, and then rip. Again, very close to 821, confirming to the upside, building up bullish momentum on the weekly. And then, of course, on the monthly here, we had technically already crossed the 821 to the downside, but the bullish price action has actually like temporarily averted the cross. And then we'll see, we're at that level now. What has to happen for us to be bullish? We need further upside. What has to happen for us to be bearish? Well, basically nothing or any weakness. So the market now, even on the monthly, even though we're in a monthly bull trend, the market now has to prove to us that it's bullish for us to believe it, or else we're just going to assume that what the market's telling us is the truth, and that actually we're about to break down further. We're just back testing to make sure before we get that next move down. And we're still very much in a bullish uptrend, but we're in the middle of a bearish correction, obviously. And there's lots of people who just held from the top, and they're like, oh, okay, it's fine. We'll just go back to new highs later. We didn't do that. We get out of our positions near the top based on shorter time frames, and then we'll get in them. And if we get out up in here, and then we get back in here, well, yeah, we didn't buy the absolute bottom. Sure, that's fine. Or maybe we did, and then we took some profits along the way. But the fact of the matter is, if we sold here and we bought here, we got a better entry price than we sold at. And even if we didn't, even if we sold right here and then we bought back in right here, at least we avoided the risk of that further downside potential. And that's what's important. Mitigating those potential big losses so that we can really reap the rewards of the big gains. And then again, little guys, those little guys just battle it out, cancel each other out. They're irrelevant. No one cares. They're like, oh, I did 4%. Who cares? Who cares? But we're never going to be like, oh, we're down 96%. But how many times are we going to be like, oh, we're up 300%? And that's what it's all about. Asymmetric risk reward ratio. You can only ever lose all your money, 100%. But you can always gain 100%, 200%, 300%, 1000%. So that's what we're looking for. Asymmetric risk reward ratio. And, that's what it's all about in the end. So IWN, Russell, ETF, again, back at the 200 simple now. Again, this thing has been absolutely pathetic, and then it has actually had a better rally than we've seen in the other indices. So again, the key levels are just get back above the 200 simple, cross them back to the upside. They both flip blue. It starts looking good. 200 exponential starts accelerating, cross above the 200 simple. I mean, at that point in time, it's like, hey, we're probably back in a bull trend. I mean, could it fail? Sure. But until that happens, we're going to trust it. And then we have obviously this previous swing high right here, and then our all-time high right here as well. So those are the key levels to watch. Basically where we're at now, if we go higher and start closing longer time frames above that, it looks good. If we take out 212, that looks even better. And if we take out the all-time high, like 245 or whatever, you're the best. Blue sky breakout. And then if we just look, at our weekly, again, we lost we bounced the 200 simple, came back, rejected below 200 simple, and then finally we're reclaiming them. Basically looks like the 821 are getting ready to cross back to the upside. We see a buy, sell, buy, not perfectly spaced out, but pretty reliable. And then of course, if we go to the monthly, we had crossed down, and now we're trying to cross back to the upside. Will that happen? We don't know. What has to happen? Basically we just have to start getting closes on a monthly time frame above like 195. And then it looks good. It looks good. So is this correction over? Are these charts telling us that we're done and we're about to get bullish again? Or are they telling us that we broke down from key support and we're back testing support, and if we don't hold that support, we will go lower? That's what I see. I see the market saying, hey, we will go lower if the bulls don't start winning the battle that's taking place. And what has been happening over the last 6 weeks? Well, the bulls have been winning the battle that's been taking place. Now, they still have way, way more casualties short term, because look at where the price is at. Instead of being up here, we're down here. So the bulls are still losing for sure. But at least they got a couple little wins right here. And if they keep it up, they could take back over. All right, so let's look at our sectors here. So I kind of have these grouped by how strong or weak they are. And again, it's the same thing. So we're going to start with industrial. Industrial, basically same thing. We have reclaiming 200 exponential. We're close to reclaiming 200 simple. Next area to watch is the previous highs. And then if we start taking out the previous swing highs, off to the races, bullish again. So industrial sector had a very powerful move to the upside after quite a bit of weakness. But here, it's slightly bullish now. It's actually like neutral bullish. Next, we have XLB materials. Slightly less bullish, back testing. Didn't quite get to 200 exponential. 200 simple is slightly higher. We want to get to 84 to start potentially flipping these back bullish. And then we have, a series of, technically this is our high. So we have a high, a low, lower high, lower low. So until we take out 88, we're technically still in a downtrend. So we're still in a bear trend until we get back above 84. And we're still in a downtrend until we take out the previous peak at 88. And then at that point in time, it's like, okay, well then let's just take out 92 and go in a blue sky breakout. And you're like, now we're talking. So XLF is next. So financials obviously been very, very weak. Had a back test of a 200 exponential. Still well off the 200 simple, but if we close above 37 on the daily, it's going to start looking good again. We flip the 200s back to the upside. It looks great. Here we have obviously a series of lower highs and lower lows. So arguably you could say, well, this is actually like the lower high. I would say just normally I would agree with you, but every other chart sort of like ignores this and it's just part of this leg down. So realistically, what are the levels? They're like 37 and then this high right here at 40. That's what I'm looking at. Now, is this important if we break above it? I mean, it's a start because at least we can get rid of this bearish divergence that's developing. But it's not going to be like, oh yeah, thank God. That's my line in the sand. We're bullish now. No, that's just like a little bump on the way down. Only because there's like, 100 other charts that say that doesn't matter. And then this one chart is like, well, it kind of matters, right? So XLY, consumer discretionary, same thing. We have a high, a low, lower high, lower low. Backtesting the 200 exponential. We need to get back above 176 to get bullish again. And then if we take out the previous swing high of 191, I mean, undeniably, like, we're probably going to revisit the high. So XLK, we're seeing technology slightly stronger above the 200 exponential, almost to 200 simple. It closed above 152. We reclaim that level and it starts to flip bullish potentially. And then again, this is insignificant high right here, obviously part of the move down. The next swing high would be right here at 163. So that's what we're looking out for. Next, we have transportation. Again, very weak. Had a nice move off the bottom, reclaiming 200 exponential, 200 simple, and the beginning of the resumption of the bull trend is at 84. And then again, same thing, with the downtrend right here, we need to take out this previous swing right here of 91.63. If you're ever looking at a chart and you're like, oh man, there's so many swing highs and swing lows, I don't know what to use. How do we figure that out? How do we know which one to use? We switch to a longer time frame and then see, well, does that help? Can we identify more clearly swing highs and swing lows? Now, does it look like maybe a high here, a low here, a lower high here, and then a lower low here? Or does it just look like a high, a low, lower high, lower low, lower high, lower low? You got to sometimes make those judgment calls on your own. But I would say when we look at it, it's basically one leg down, the retracement of that leg, and then another leg down. And another thing you can do if you're not sure is draw a fib from the top to the bottom and then see, hey, did this come down to like a key level? Like, is this going to line up perfectly with like a 0.5? Yeah, so we come back up exactly, to the 0.5 and then it rolls over. So you're like, okay, that seems probably like that is actually just a leg down, the retracement of that leg. We give back 50% of the down move and then we resume the downtrend. So again, it's just one more thing. A lot of the charts are going to be clear what the swing high and the swing low is. Sometimes it's going to be a little confusing. So we can look at the other charts as a reference and then we can obviously look at other data points, see if something reveals itself. So now we're into the straight up trash right here. Communication sector is just, by far the worst ever. Anybody that was like, I'm buying the dip in communication, literally just missed out on this whole rally because nothing happened because communication obviously is trash. So XLC, obviously clear bear market, clear downtrend, nowhere near even taking out like a previous swing high, nowhere near even reclaiming the 200 exponential and simple. So what's the deal here? Is communication actually just telling us like everybody else is lying? Or is everybody else bullish and communication is like, yeah, I don't know, and communication's lying? We don't know for sure, but I trust the majority over the minority. I trust the breadth of the market, the sectors, the major, ETFs or indices. So is communication lying to us, or is communication just a dirty dog right now that nobody wants anything to do with, that's going to present amazing opportunity in the future? Yeah, I would say that's exactly what it is. It's a dirty dog nobody wants right now. It smells, but eventually we can clean it up. It'll look decent, and we'll let it back in the house. Maybe. But clear downtrend, what do we need to do to resume the uptrend? We need to get all the way back above 67, and then we need to take out this previous swing high right here. Very, very weak right now. So onto our safety sectors. So XLRE, real estate, backtesting at 200. If we get back above 46, we resume the bull trend. If we take out the previous swing high of 51, we resume the uptrend or negate the downtrend by putting in a higher high. XLP, consumer staples. Again, safety trade back above the 200 exponential and simple. 200 simple is above the 200 exponential. So not great, but in time, if we stay above them, the 200 exponential will cross back up. We'll confirm back into a strong bull market, and it's off to the races. So here we had the leg down, the little retracement. We've already taken that out, and then we had the next leg. So honestly, there's not a lot standing in the way. We have a previous high right here at like 78, and then the all-time high at like 81. Very strong. We don't have really like a previous swing high because of this one that we haven't taken out yet. So it's basically just all-time highs or nothing. Blue sky breakout or nothing. XLU utilities, again, soaring up here. We talked about, hey, expect this at new all-time highs very soon. Well, here it is. We're seeing massive strength. Beautiful gap up and just completely melting to the upside. By far the most bullish sector. XLE still staying strong. Bouncing 200 exponential and simple. Putting in a lower high and then putting in a higher low right here. So we don't know exactly what's going on with this. Obviously still bullish on energy until we have a reason not to be. 200 exponential is still above the 200 simple. We're close to that changing. If we consolidate around this level too much, the 200 simple is going to lap 200 exponential. If we start moving back to the upside, it's going to look like a bounce and then continuation, which is probably what's going to end up happening. Of course, right now, everyone is saying, look, energy's come down, commodities come down, inflation's come down. Sure, they came down for a month. Is that it? Is the commodity bull market bull cycle over? Is the energy bull market bull cycle over? Are the prices coming down because of demand destruction? Or are they coming down because of extra supply coming online? Are we likely to see more or less demand going into the future? Well, there's if this then that. If we go into a recession, we're likely to see demand destruction. Because, and this is where everybody gets caught up with the whole like definition of a recession and all that stuff. Who cares about like the exact definition of it? We can talk about it. We can argue about it. You can argue why we're in a recession. I can argue why we're in a recession. You can argue why we're not in a recession. I can take the other side of that. That's fine. There's legitimate argument for everything. This is obviously like nothing we've ever seen before. But the fact of the matter is, what really is a recession? What is the point of a recession? The point of the recession is to say, hey, are we growing as a world or as a country? Or are we shrinking? Are we seeing more productivity? Are we seeing more goods and services created, consumed? Are we seeing more velocity of money like spending picking up? Or are we seeing less of it? Because we know for a fact that the whole entire Ponzi scheme of human race is built on ever expanding. Ever expanding what? Population, money supply, technology, efficiency, energy, like everything. It's all about growth as a human race, as a species, as a planet. We're trying to be better, theoretically. We're trying to be better than we were in the past. That's what the determination is. So are we in a recession? Who cares about 2 quarters of declining GDP growth, or let's wait for the Economic Bureau of Labor Statistics to come out and officially declare the recession? Who gives a shit? Right now, what do we know are the key factors into, are we expanding? Are we growing? Is the giant, Ponzi scheme of the human race getting bigger, or is it shrinking? Well, we look at, the basic stuff. Obviously, population growth, immigration for certain countries, productivity, labor participation, all these things. And then we factor it all in. And then we say, okay, when we take into all that, and then we look at it now, are we making forward progress, or are we stagnating, or are we making backward progress? And to tell you the truth, the key factors in that are costs, right? If the cost of energy which we need, for people, we need food energy. So for instance, here's another metaphor, because I know you guys love my metaphors. If I am, a hunter-gatherer thousands of years ago, and we don't have a refrigerator to put food in, every day or every couple days, I have to go out and I have to get some food to feed myself and keep myself alive. And if I'm good at that, if I'm good at staying alive, I might be so good at staying alive that I can actually help out my tribe or my woman or my children or whoever else. I can be a provider. And what do I need to provide? I need to provide energy. And what is energy for people? It's food. So the same way we need food, if I'm an efficient hunter, if I'm amazing, if I learn how to, instead of throwing a rock at a woolly mammoth, now I'm throwing a spear at a woolly mammoth or at a deer or at a whatever, buffalo, whatever it is, the more efficient I become, the more effective I am as a provider. Therefore, the better off our whole tribe can be. And we extrapolate that through like the human race as a whole, okay? And we say, okay, if I'm out here hunting and I can get 10 times what I need, now I can feed my wife and children and then another, part of our tribe as well. So what does that mean? It means not everybody in the tribe needs to be out hunting nonstop. Now we can have some women and children picking berries, or they can be working on making our, cave a little more comfy or something like that. So the more productive we are, the more we're able to grow. Because if everybody has to go out and hunt, even the people that suck at hunting, because we need food, we don't have anybody to, weave baskets and go collect rainwater and, cook food and gather berries and, take care of children and teach them, all the useful things. So the fact of the matter is, the productivity is what allows us to grow. So that's what matters. So when we go full circle with all that, and then we look at our little example of just a little tribe or a little provider or whatever, and you can swap in like woman for man or man for child or child for man, or I don't care. I'm just talking about like historically, if you look at a book, you're going to see like a caveman hunting and taking care of his family, and probably like, a woman taking care of a child and maybe gathering berries. It doesn't have to be like that. It's not like that anymore, but it's a good example. So going forth from there now, what is energy telling us? Well, energy, as far as productivity for everything other than people, everything other than us, is our energy, in the sense of coal, in the sense of oil, in the sense of nuclear, wind, solar, all that allows us to be more productive. If I have to spend all my time, generating energy, figuring out where to get energy from, if I have like an alternator on a bicycle and all day long, in order to power my refrigerator to keep my food cold, I have to be on this bicycle, like spinning the alternator and charging up a battery so the fridge can stay on. I don't have any time. I can't go do anything else all day because I need to be on that bike 16 hours a day. It's super inefficient. And then I need to go to sleep and get ready because I got to get back on that bike again just to keep my food cold so that we can continue to exist. But if as a human race, we can develop more efficient ways of harnessing electricity, capturing it, and then utilizing it, something like, making some coal from an old fire, and then we have some coal bricks, and then when we go to start a fire again, we can just light it right up and, it's ready to go. Or maybe something more efficient. We have a battery now where we could store it, or maybe something super efficient like nuclear power where, thousands or hundreds of thousands of people can get power from it. That's all about productivity and efficiency. And that's what's key towards growth. So right now, full circle, are we more productive as a human race right now? Are we growing right now as a human race right now? Are we seeing population growth? Are we seeing immigration growth, locally into whatever country you're in? Are we seeing higher labor force participation rate? Are we seeing higher productivity per capita? Or are we seeing all those things lower? Because I would say that we're seeing all those things lower. So is it viable for us to make advancements without higher productivity than we had just a couple of years ago? I don't think so. It's going to take a long, long time, in my opinion, especially because of de-dollarization, de-globalization, all this nationalization, etc. It's going to take a long time before the human race as a whole is more productive than it was a couple of years ago as we start walking back all of this globalization. But, we have sacrificed efficiency for, basically resiliency, or sacrifice rather resiliency for efficiency. So now we're going back to where, hey, maybe we're not going to be as efficient, but we're going to be more resilient as a country, as a human race, as, a family, whatever it is. So what I see is, it seems very unlikely that we're going to be more productive, at least short term, going into the future. So energy, transportation, food, all those things are going to be, in my opinion, big headwinds. Big headwinds. I mean, the green energy movement is great. I'm all about it. But let's be real about timeframes. Let's talk about 2050. Let's talk about, 2100. Let's not talk about 2030. We're not going to get anything done in 8 years. I mean, we might make some progress, but come on, man. Come on, man. And now we're going to start investing in all this stuff right now. We've had how many years to invest in all this stuff? We've done nothing. And now, while we're in record high commodity prices, record high food prices, record high transportation, literally like record high everything cost wise, now all of these governments, all these, people in charge, now they want to make big investments. Why didn't they invest anything when everything was cheap? Oh, because they're morons, obviously. Otherwise, when you're killing it, when everything's great, when you're a booming economy, that's when you raise rates. That's when you start affecting the price of money. That's when you start, reinvesting capital. You don't do it when everything's at record highs. I'm not like, man, everything's super expensive today. I think I'm going to go stock up on cars. And you're like, wait, what? And you're like, yeah, I've just always really liked cars. And I've kind of been putting off like buying a bunch of cars. So I think I'm going to go out and buy a bunch of cars. And you're like, well, that doesn't make any sense. They're at record high prices. And you're like, yeah, but, I'm the government. So who cares? I'll just go buy a bunch of cars because that's what I want to do. Like, is that a good idea? Or is it good to buy them when they're on sale, not when they're at record highs, obviously? So XSD, semiconductor ETF, again, very clear indication as to what's going on in the economy, what we can expect going into the future. These things are extremely, extremely cyclical. Broke into a bear market, we're back testing. We have our previous high right here. We need to get back above the 200 simple. We need to get back above that swing high. And then after that, we can look at the all-time high. Right now, all these indicator oscillators have moved all the way to the top of the range, inside the bullish control zone, and now they're rolling over as we're back testing key resistance. So we buy support, we sell resistance. We buy when we exit the bearish control zone and get the hard buy signal and start doing all the stuff we always talk about. And then we sell when we start getting to all these levels and start rolling over. But everybody wants to buy right here. They want to buy here, and everybody wants to sell right here. So it's all about just basically saying, hey, whatever my brain tells me I want to do, I'll just do the opposite. And then, obviously you have to be a little more, you have to put a little more thought into it than that. But, it's a start. So, all right, so let's take a look at the DXY, the old dollar bill, yo. So everybody's talking about, obviously, how the dollar's going to melt down. It's on its way to zero, all that good stuff. Again, what do we see in the 10-year treasury chart, the TNX rather, the yields? Very, very similar. Big breath in, little breath out. Big breath in, little breath out. And then what's next? Big breath in to new highs? Probably. Now, we see this trending all the way from, bullish control zone all the way to bearish control zone. And where did it go? Nowhere. And the last time we were in the bearish control zone and we trended to the bullish control zone, where we go? So we started here, we went to here, we started here, we went to here. So we're substantially higher. And then where are we at again? Basically the same spot again. So if we do take another leg up here, it's going to be a powerful one. How is that going to happen? We don't know yet. There's definitely a little bit of could go either way going on right here. Obviously, the dollar is weak while everything else is strong. Everything else is weak while the dollar is strong, trend-wise. And what are we looking at on the weekly? Well, on the weekly, we see now 4 weeks in a row of red histograms. Not cool. Left the bullish control zone. Stoch's angle to the downside. We had a massive move to the upside. The whole time, the slope was blue. So when the slope turned blue, look how beautiful that was. And here you might have gotten scared out with those red histograms, but you're still above the slope and it's still blue. So really, what are we doing? We're just consolidating before the next leg up. So what's happening here? We got a bunch of red histograms. The slope is still blue. So when we come down to the slope, do we bounce and go much higher? Or do we come down to the slope and then retrace? We don't know for sure, but we know that as long as this slope is still blue, we're still above it. We're still above the 821. They're still aggressively angled to the upside. The 200 exponential is above. The 200 simple are getting ready to cross above it. It looks to me like we're in a pretty strong bull trend. We're just in the middle of a little correction. So how deep is that correction going to take us? Do we go down lower? Do we go higher from here? We don't know for sure, but definitely getting some signals. All right, so on to the monthly chart. Again, very, very bullish. bullish control zone, all green histograms, blue slope line, 821 across the upside, 200 exponential, blue slope above the 200 simple with blue slope, maximum bullishness. Literally the only thing in existence that could make the DXY stronger than it is right now is if we were at all-time highs. That's it. That's it. And what's stopping us from all-time highs? This peak right here and that peak right there. Are we going to get through those peaks? Well, I don't know, but we know this is the next one to pay attention to. So what's our next target to the upside? 120. What if we topped out already? What's our next target to the downside? Probably a back test of some of this key support right here, somewhere around like 100. Nice round number. What's going to happen first? Well, I mean, we assume that we're going to go higher first because we're in a bull trend. And technically the bull trend is really just getting started. So I was going to look at the main names, but obviously TradingView was having some issues again. Let me double check to see if it's sorted. No, it's still acting a fool. I don't know what is going on. If it's like regional or something like that. Yesterday when I was having all those issues, like everybody else in the group was like fine. And I literally went through and tried everything. I tried a Mac. I tried a desktop. I tried a Mac. I tried a PC. I tried desktop. I tried the laptop. I tried literally everything. Cleared my caches. Used a different browser. Reset. Updated. Like literally anything, and it wasn't working. So I don't know. Nobody else was having any issues. And then suddenly it was just fine again. So I'm not sure what's going on with TradingView. It might just be like a local issue, but still acting a fool. So Amazon, not going to tell us much, but essentially just the same thing. We see all these charts and they all look the same. There's a couple of them that are actually bullish and still on top of the 200 exponential and simple. Most everything is bearish and trying to stop that bear trend or back test to make sure we're going to continue that bear trend. And then a couple things are a little stronger. A couple things are a little weaker. But overall, everything pretty much looks the same. I mean, energy looks good. Utilities look the best. And then pretty much everything else is just kind of like, eh. I mean, obviously, yields and the dollar are pretty strong. So gold, again, not much has changed on gold. You know, basically have been just trending down, melting down, retesting the macro lows of this whole entire, like, you know, what. This is really, like, not looking good to me, to tell you the truth. I mean, this essentially looks like, I mean, it's at this point in time, it's just a big channel. So, I mean, that's it. We can draw it back to here. We can start it at the bottom right here. But essentially, we're just in a big channel. You know, we're range bound between the lows at 1674 and the highs at like 2100. So we've touched the top twice. We've touched the bottom. You know, we'll just call that once between those two. Twice right here. There was our third one. So we got 2 touches on the top, 3 touches on the bottom. So what's the most likely thing to happen? We probably just continue trading within the range. So we don't get a lot of info off the daily. There's obviously a lot going on here. We're in a bear trend. We went bearish, bullish, bearish, bullish, bearish, you know, a bunch of times here. So whatever. Don't get a lot of info. What about on the weekly? You know, back tested the 200 exponential. You know, what does that look like? I mean, looks exactly like, you know, the Dow and the S&P, right? Back tested the 200 exponential, got a bounce, trying to confirm the 821 cross back to the upside. As long as we're still red cross, you know, to the downside, it's not good. Hard buy signal, a bunch of greens, you know, histograms, building up momentum. But we just had, you know, a multi-month or a month-long push to the upside. So is the momentum about to fade and we just used it up and now everybody's going to get stuck behind the top? Maybe. I mean, we don't really know what's going to happen, but we can see probabilities. And we know that, well, I mean, with certainty, if this monthly closes where it's at now or lower, we're going to be just 1 month closer to the 821 bear cross. And we see right here, when that bear cross happened, we see a complete meltdown on the monthly that lasts for years. So I love gold. I'm super bullish on gold, long term. But, you know, we see the rejection of the blue slope line. We see the rejection of the blue slope line from below. We see the 821 cross the downside and then complete meltdown. We see the potential of the 821 cross the downside, complete meltdown. This is the tightest 821 have been to each other since we basically crossed them bullish right here. And since we crossed them bullish right here, that was at 1265. So we went up like $700 or $800 since then, like a 50% move in gold almost. And now we're likely to cross them back down. If we do cross them back down, are we just going to go straight to zero? No, but we could have a nasty retracement. We could go back somewhere crazy like 13 or 1400. And again, that's not my base case, but you know what? If you asked me 2 years ago, is gold still going to be trending sideways between 1700 and 2K? I would have been like, no, of course not. Not with inflation fears, not with, you know, global instability, not with a land war in Europe, not with all these other factors going on, but yet here we are. So what good are fundamentals? I mean, they're useful, they're good, but in the end, did this ever tell us? Did this chart ever make it look like we were going higher? Did we? No, I don't really think so. Matter of fact, I think this chart has been telling us the truth for a long time. It said hard sell back in here. And the last time we saw one of those was right here at the top. And the time before that when we saw one, was basically right here on the back test for a higher low. So, okay, what if this happens and we just come all the way down and we put in a higher low? Well, that's bullish. I mean, it's not going to feel like it when we melt down $500, but it's technically bullish. So we'll see what happens. I'm still very, very bullish on gold long term. I think everybody should have part of their, savings or portfolio in gold. But is it speculative right now? I mean, I wouldn't speculate on gold or silver right now, honestly. Don't think that's a good idea. You can do whatever you want. Obviously, it's not financial advice, but so silver, we see the opposite. Silver was actually trending very, very clearly in this channel, and then silver actually broke down from the channel, back tested it, and got smacked down, and then put in a new low. Measure move from the channel break itself. So is silver actually just doing what gold's about to do, and it's just weaker, so it's doing it first? We don't know if silver's a canary in the coal mine or the outlier, but I mean, it doesn't look good. Weekly chart, we're below 200 exponential and simple, back testing them. If we just go sideways from here, all we're going to do is 200 exponential already rolled over, 200 simple is going to flip bearish, and then at that point in time, new lows. And you're like, yeah, but the hard buy coming out of the bearish control zone with multiple green histograms. And I just want you to remember, here we got that same signal right here, and we saw a tiny bit of follow through, and then we failed to cross 821 back to the upside, came back down, revisited the lows. The most important thing to remember is that, are we buying dips right now, or are we selling rips? Are we bullish right now, or are we bearish? And essentially this chart is like, well, we're below the 200 exponential, that's bearish, it's red. We're below the 200 simple, that's bearish, it's blue though. So are we bearish neutral right now? I would say we're pretty much like neutral, maybe, I would say neutral right now on the weekly. On the monthly, we're still bullish. 200 simple has crossed above the 200 exponential though. We back tested the 200 exponential and simple. I might have said gold, but I meant silver. We're in the bearish control zone. We just flipped the slope line red. So we had a rally when the TDMACD flipped blue right here at $17.50. And then we went up to $30 while this was all blue. And then we saw a bunch of red histograms, the hard sell signal inside the bearish control zone. We back tested the slope line. It rejected us. The slope flipped red. So when we see a big blue slope line like this, typically afterwards, sometimes we'll see a little red and then more blue and then a little red and more blue. But eventually we know we're probably going to get a big red one too, because the market breathes in, the market breathes out, the market breathes in. So what's going to happen? I mean, the silver chart, a long time frame, if you showed me this chart and didn't tell me it was silver, I would say like, oh, what is this? Like XRP chart? Like some dead asset or something like that? Like, what is this? The MySpace chart? Like, this is trash, right? Because we put in a high back here in 2011, and since then we put in a low, then a lower high, and actually we have a lower low right here, and then technically we took out that high. So arguably maybe we're starting to transition back into a bull trend on silver. Maybe. But I don't love this chart. I mean, it looks pretty weak to me. And then when we really look at this chart and you say, okay, when did we put in an all-time high? 1979, 1980, whatever. And then we back tested and got rejected, double top. So sure, this could be a cup and handle for sure. It definitely could. And I think eventually we'll take out $50 and we'll go to the moon. But we got to take out 30 first. So there's no reason to get bullish on silver when we're still below $30 to think that we're going to go to 50. And there's no reason to think we're going to 30 if we can't hold 20. And I mean, if we can't hold 20, I mean, who knows if we're going to come down here and put in a new low. So better be careful at 14. So it's just worth paying attention to, like, there's definitely a divergence taking place between precious metals and industrial metals, technicals compared to fundamentals. All right, so I can't even load up a Bitcoin chart because TradingView is trash. So what I can do, there's so much happening off screen, and you'll never know. Just so happens I already have one, so we can use this one. Okay, so Bitcoin on the daily, This is a Binance chart just because that's what I have loaded up. So I know, Binance is trash. So what's happening right now? I mean, we had that big leg down. We're basically consolidating in what amounts to this ascending channel. And matter of fact, I was talking about this, about sometimes it's not clear how to draw a pattern. And if you go down to like a shorter, or if you go up to a longer time frame, it might be like a little more clear. So there's a lot of ways you could draw this. This is how I would be inclined to draw it in real time. Okay, and then we can see if that's the best way to draw it. So here we put in a peak based on closes. Here we put in a trough based on closes. We double test that. So now we have 2 points on the top right here. And then we come back down and put in a higher low. So now we have, 2 points on the bottom right here. Now, should this be slightly higher in real time? It probably should. But the way like the wicks line up right here, I like how this looks. So this is obviously a nice trend. The majority of the price action takes place inside of it. We see clear interactions with the heart line, clear interactions with the heart line, clear interactions with the heart line, clear interactions with the heart line. So we know there's clear interactions with the top, there's clear interactions at the bottom, there's clear interactions with the heart line. So probably if we're not drawing this right, everybody else is also not drawing this right. So, I mean, if the majority of people are not drawing it right, but doing it the same way together, then what's right is wrong, and what's wrong is right, baby. Because we're in the majority. Yeah, buddy. So essentially oscillating inside this range. We had a little push up outside the range right here. We had a little push up outside the range right here. And you're like, well, obviously this is just drawn incorrectly. So we need to actually like extend this out just slightly. And does that make this more or less useful? Well, we still see some interactions with the heart line. It's not bad. We see now only one touch on top. So obviously that's not better. It's actually worse. What if we go this way? What if we bring it down slightly? And then we see, well, now we have a touch here and we have a touch here. The heart line still looks decent. That could be it, right? But now we have only 2 touches on the top. So what if we leave it the way we originally had it and see, is it possible that's how everybody else is looking at it? 1 touch on top, 2 touches on top, 3 touches on top, 4, a breakout, a failure, a back test, a lower high, a failure, 5, a breakout, a rejection, failure. I mean, this looks right. And then again, another one right here. So in my opinion, this is how it should be drawn. But it really doesn't matter as long as everybody sees the same thing. But the problem is, what we want to pay attention to is we already did something pretty similar to this before. Now, it doesn't mean it has to happen again, but it's worth paying attention to that this is basically just this is a bearish pattern. This is a textbook bear flag. So, what we see on a bear flag is we basically get a leg down, and then we see a bullish consolidation where we slightly like float up, and then we get our next leg down. And then we see a bullish consolidation where we lightly float up, and then we get our next leg down. So that's what I'm seeing happening right here on the 4 hour for Binance. And then again, just to kind of throw a couple fibs on this chart, because it's nice and clean, let's just go from the high right here to our low. All right. And then if we go from that high to the low, we can get a fib right here. And essentially from the peak to the trough, what happened? Well, we bounced clearly at the 0.5. We don't know that's going to be the 0.5 yet, obviously, because we haven't put in a low. But hindsight, we look back and we see clear interactions. We see clear support and resistance around those levels. When we break down to the 0, we backtest, we made it to the 236. So we finally got back to the 236. So what does that tell us? We have just now legitimately, on these last couple of peaks up here, like validated the fib from the all-time high to the low, saying, hey, what's likely to happen now is we push up to the 236. It's likely we consolidate for a bit, and then next we push up to the 382. So we still have targets up here to roughly like 30K, something like that, the back test of the breakdown. Now, what happens when we get back to 30K? Is Michael Saylor just puking positions, just trying to de-risk? Maybe. Do we ever get back to 30K and actually like the market just will not allow that? Maybe. Do we just roll over and go lower and this was just a false and the fib will never make it to the 382 and we'll just put in a lower low? Maybe. We don't know. We know it's a bearish pattern. We know this is a really bearish chart right here as well. And then obviously the next key level we want to look at is the other key swing down right here. So we have the high, all-time high, and then we have the local low, and then we want to take the clear swing. So we have a high, a low, a lower high, and then a lower low, and this is just part of that next leg down. So now we have two key fibs. I'm going to switch this one to orange. So we have the orange fib, we have the red fib. So we're going to look for confluence between those levels and what's been taking place. Well, we see on the orange fib, we actually smashed the 236 and confirmed the low was in, consolidated, higher lows inside our channel. We smashed the red 236, confirmed the low is in, higher lows inside the channel. We come back test again, back test again. Now it sort of looks like we're putting in an ascending triangle. So when we do finally, if we do finally get above, consolidate above the 236 and see follow through, our next target's a 382 in orange at 26,000 roughly. And then the 0.5 and the 382 line up perfectly at about 30,000. And we know that the 0.5 is our Dow, correction, 50% Dow theory. And we know the 382 is the minimum retracement we want to see before we go lower or before we continue to the trend. Now, is it possible we come to the red 0.5 or the red 618? Sure, it's possible. It is definitely possible. Could we get back to 40K, 41,000? We could. And if we do, that's going to invalidate what's taking place right now, which is essentially a 1, a 2, a 3, a 4, and then we're expecting a 5. So that will invalidate some of our current, thesis, which is okay. That's fine. We don't always have to be right. The key is not being right all the time. The key is figuring out a small edge to be right more than 50% of the time, and then having clear areas where you're like, oh, and I'm wrong, so I'm not going to just stick to my guns. I'm not going to die on this bridge. I'm actually just going to adapt and just figure out, how do I make money if I'm right, and how do I make money if I'm wrong? And that's the real key. So here on the daily, we're very much in a bear trend. We have clear levels to look at. We see some more confluence here around that orange 618 or possibly around the orange 0.5 and the 382 in red, depending how long it takes for us to get there. Seems like 30,000 is probably a really high likelihood key level. And then obviously that was a key level from back here, as that was the low on the push down before the final leg up. So 30K seems very, very likely. Now, do we undershoot it and only go to like 26 or 28K? Maybe. Do we overshoot it and actually go to like 30 or 34K? Maybe. The key is that when we have this 1 and then we have that 2 and then we get our leg 3 down, when the 4 comes up, the 4 cannot come up higher than the bottom of the 1. So if we go above 35K, which means we're back on top of the 200 exponential and simple, and they're probably flipping back blue. If we go above that level, the bottom is in and it's ready to go. And you're like, so you're going to wait till 35K to say the bottom is in? Well, no, not at all. It's just one of our ways to tell the bottom is in. Okay. We said the bottom was already in, back here based on our targets to the downside, the fib extensions. And then we said the bottom is in based on this orange 236. And we said the bottom is in based on the red 236. And you're like, well, the bottom, you can't just say the bottom's in 3 times. Well, no, that's exactly what we do. We just have steps. It's like a little step. The same way we step our way down into a bear market, we step our way up into a bull market. So one step after another. And if we can write down on a piece of paper, okay, what's the first step? From the high to the low of the previous swing, we hit the 236. What's the next step? Well, from the high to the low, from the all-time high to the current swing low, we hit the next 236. Okay, so step 1, done. Step 2, done. What about our indicator oscillators? Do we have any steps on those? When the 821 flip green, that's step 1. So done. What's the next step for that? We got to get back above the 200 exponential and simple. We know when that's going to happen. Still a ways away. What about on the night or the jewel thief? Hard buy signal leaving the bearish control zone. That's step 1. Stoch's trending to the upside. That's step 2. Entering into the bullish control zone. Well, we never quite made it, but what about right here on the TDMACD? Same thing. Bunch of red histograms. That's still bearish. 2 green histograms in a row. Starting to look good. Cross above the slope line. That looks good. Slope line flips blue. That looks really good. Get above the 0 line. That looks even better. So step 1, step 2, step 3. So many steps. And when we put it all together, it's like, oh, it's a 25-step plan from a bear market to a bull market. And each of those steps is going to happen in different places at different levels. But if we have those clear steps and everything, we can look at these charts and say, okay, we're actually looking pretty bullish right now based on like construction, or actually this just looks like what happened last time. It just, people are just a little more bullish now because we hit that 20K level and it held. So now it's better. But when we hit 30K, it was like, yeah, 30K is the bottom, but it's like, is it though? Or are we going to 20K? And then everybody's like, actually, we're probably going to 20K. And then we go to 20K and everybody's like, that's the bottom. And you're like, well, I mean, is it? Because everybody said that at 30K. So if they said at 20K, are we now going to 16 or 14K? I mean, I don't know, but there's a lot here and a lot pointing us in the right direction. But when we look at the weekly, we lost the 200 exponential, we lost 200 simple. We're back testing the 200 exponential. We hit it for the first time. It is red now. We're above the 200 simple. As long as we're below, the 200, as long as we're above the 200 simple and below the 200 exponential, we're range bound, in my opinion. Which this range is like microscopic. It's like 23,000 to 25,000. It's not like a useful great range. I mean, it's like, what, 8% or something like that. But again, I would expect strong support and strong resistance at these levels on the weekly. And then the direction we go after that, if we break up from here, we're going to retest the 21. And again, that's right around 28K. So more confluence. If we break down from here, we're probably going to revisit the lows and at least try to sweep the lows and see if it holds. And then we have our channel. We could see if that holds. Obviously a lot of other stuff we can use here. We have key fibs. Does a 236 hold the support when we come back down to it, et cetera, et cetera. Hard buy signal on the weekly, though. We're seeing it across the board. Everything is saying hard buy on the weekly. Momentum is building. We're going back up from here. Everything is saying that. But we often see that same signal after an extended sell-off into the bearish control zone. And then we get the hard buy as we exit. And then actually it rolls over. We don't know if that's going to happen. But it's worth noting that we're very likely going to see a situation like that. And then once that happens and it rolls over, then we say, okay, if we don't put in a new low, that's good because the market can build off confidence from that on the back test. If we do put in a new low, we just X everything. We put the sign up, days since new low, 0, and we just start the same thing over and over again. I mean, it's sometimes I know it's boring and it's repetitive, but the best success you will have in these markets using any kind of analysis or trading or investing or whatever is consistency. Because if you can eliminate every extra variable and just figure out what works consistently and how well does that thing work, you will have an advantage like no one else has on these markets. If you can remove your bias and you can write out on a piece of paper every single thing, that's part of your trading plan, explain risk reward, explain position sizing, explain, probability of success based on trading with the trend, buying support, selling resistance, all that good stuff. You start writing that all down and then you say when the 821 crosses to the upside, if we're above the 200s, that's bullish. If it crosses to the downside and we're below the 200s, that's bearish. You go through, you write all that stuff down in a notebook or whatever, and then over time, you keep using this stuff. You say, wow, this actually is like not working that great. So maybe I'm going to give it a little less credibility. And then you're like, man, every time we do this, it works phenomenally well. So I'm going to give that a little extra weighting. And then over time, you might eliminate one of your steps and then put something else in instead. And that's all up to you. I'm not saying I have the best way to trade. I'm not saying that my way of investing is the absolute best. I'm not saying I'm the most successful person. I'm going to make the biggest gains. I'm very conservative. Okay. I'm very conservative with how I trade. But the truth is, it works. It works really good. And it's super simple. Matter of fact, if you have the indicator, you don't have to do anything. All you have to do is just not be colorblind and you're good. And even if you are colorblind, you change the colors to something that you can see. So then at that point in time, you just have to not be blind. And even if you are blind, you could ask your kids, hey, is this green or red? I'll take an entry on that. So realistically, there's no excuse to just find a system that works and stick to your guns. Use it. Use it to your advantage. What's your edge? If you can't explain to someone clearly in like a couple sentences what your edge is on the market, you don't have an edge. What's your edge on the market? Well, I read the news a lot. What's your edge on the market? Wall Street bets forums. What's your edge on the market? Silver is undervalued. What's your edge on the market? The full moon is coming in 3 days. I mean, at least you can say it. Even if it's bullshit, at least those are examples. Clear, definable examples. Is there a full moon coming in 3 days? No. Well, then I don't have an edge. I mean, that's fine. If that works, by all means. I don't know anything about astronomy or astrology and how you can use that. I don't, go to Miss Cleo and have her read my fortune to me and then trade based on that. But I'm not saying it won't work. It will. Maybe it will work for you. Maybe something else will work. Maybe inside, information will work for you. I don't know. Whatever. Do whatever you want. But the fact of the matter is, if you can't define it in a couple sentences in crayon, for a kid to understand, it's not going to work over time because you're going to confuse yourself, let alone anybody else that tries to do it. So keep it simple. Trade with the trend, risk reward ratio, probability of success, position sizing, lock-in gains, buy support, sell resistance, Fibonacci, confluence, moving averages, all that stuff. Put it all together and you got the Batman utility belt. I mean, you're fucking Batman. Well, I mean, you're not. I'm Batman. I'm Batman. You're Robin. But you might be saying right now to your TV, actually, I'm Batman. To which I would say, no, I'm Batman. Sorry, if you don't know what I'm talking about. But seriously, though, that's what it's all about, building up that utility belt. We can all be superheroes. But I mean, obviously, I'm Batman. You can be the 1950s Batman. You can be that Batman. No, you can be whatever Batman. You can be Ben Affleck if you want. But you're not the real Batman. Anyway. So for Ethereum, obviously, not a lot has changed here. This was very strong. Led us out of the bottom. How were we able to identify Ethereum as the best? You're the best. How were we able to figure out that Ethereum was going to be, one of the leaders here? It's simple. When we put in this bottoming pattern here, Ethereum put in like a very clear range. And then, we could trade the range as much as we wanted. But in all reality, we say, okay, we're going to buy support at the bottom of the range. And then we're going to sell some resistance at the top of the range. And then actually, if we break out of that range, we still have part of our position open. And then maybe even we'll add to that position, etc. And obviously that had played out extremely well. But to tell you the truth, this was the simplest thing ever in all of existence. Because what happens right here? Well, if you just draw a fib from the low at, $80 to the high at 5,000. I mean, we came down to the 236. As soon as we lost the 236, how did we pick the exact bottom on Ethereum? I mean, it was easy. Let's be real. $1,000. Nice round number. It was easy. Also, the 382. It was easy. And then what happens from that? The 382. What happens after we break down from the 236 and then hit the next fib down? Well, we backtest the 236, of course. And then what happens there? Well, we get rejected and then we go to the 0.5, of course. Or we don't. And if we don't, we probably reclaim the 200 exponential and simple. And if we do that, we probably test the top of the ascending broadening wedge. And if we do that, we probably test the previous swing at 35.50. And if we do that, we probably retest the all-time highs. And if we do that, we're probably going to 7,000 or 10,000 or a gazillion, trillion, babillion dollars. Okay? Okay. So we don't know what's going to happen, but we know for sure that one of those two things is going to happen. We're going to go up or we're going to go down. Maybe we go sideways, but eventually we go up or we go down. So let's figure out where we go up to, likely, and let's figure out where we go down to, likely. If we go down, the area I'll be looking for is a backtest of 1236. And does that hold? Because that was the top of the channel. We broke out of the channel. We backtested 236. We come back down. And maybe, let's just say we started to sell off. And we come back down. Let's look for confluence between the heart line of the descending broadening wedge and the top of our channel right here. And then say, hey, there's probably, and again, this doesn't have to happen. But when we're looking at this chart in 2 weeks and we're like, oh, that's weird. Went to our box. I mean, price action is drawn to our boxes the same way that we are drawn to attractive ladies' boxes. Okay, if you know what I'm saying. I mean, it's instinctual. Okay, it's animalistic tendency towards the box. So obviously the 382 will be our next test of downside. I'm not even going to put a box there because realistically, if we hit the 382, we backtest the 236, we're likely going to go one fib level down, two fib levels down, and then we're probably going to be at the 0.5. So that's what we're looking out for. So we have the green box, we have the blue box. It's likely where we're going. And then of course, like always, I thought we had a red box up here, but I don't know what happened to it. Or I guess we have the trade set up maybe. I don't know. Chart gremlins might have deleted it. Those little fuckers. All right, so we have resistance up here where we like to get rejected. Now, realistically, I would probably put it here normally because that's our target, the 236. But we've already hit that. So is it, in hindsight, you're like, oh yeah, we hit the area that we want. So now we're going to say that's where we top out. Well, no, let's be legit here. We'll say we probably top out. It's a 200 exponential, the 200 simple, or the top of the ascending broadening wedge. Now, could we just draw it here and say, oh, that could be, well, yeah, but that's a pretty big box. I mean, try not to say that to the ladies, but hey, It's true. It's true. But the fact of the matter is, I mean, when it's all said and done, this is trading very, very technically. And then, you know, we can do all the other like fancy stuff and be like, oh, let's look for confluence between, you know, the all-time high and the low, and then see where this lines up with, you know, what we have previously. And it's like, oh, look, you know, we kind of stalled out. We shot through the 236, back tested it for support, and then continued. Then we made it up to the 382, busted through it, lost it, came back, kind of held it as support. So now what's the next target? The 0.5. So it's just it's reverse slinky theory. You know, we're just basically like climbing up the stairs. 0.5 is right at the 200 exponential. You know, the 200 simple slightly above it. The 618 is a little above that, and obviously the descending broadening wedge as well. So, and then if we break through that, you know, new all-time highs maybe, I don't know. So yeah, that's what we're looking at. Pretty simple. I mean, really, when you look at it, and then again, if we look at our longer time frames on Ethereum, you know, on the weekly chart, what happened? We're just bouncing the 200 exponential and simple. We reclaim the 200 exponential. They're both still blue. We're back testing the 21. If we get through the 21, you know, we're likely headed to like 2,500. Our target to the upside on Ethereum, or downside on Ethereum, was 1,000. Our target to the upside on Ethereum was 2,000. So we went from 1,000, or I mean 1,900. Went from 1,000 to 1,900. Freaking phenomenal gains. And again, now everybody wants to get bullish on Ethereum. I don't think now's the time. Ethereum just crossed the monthly 821 to the downside. And what is this? A back test? So we come up here to 2,200 and then we roll over. And it's like, oh, I mean, we're just confirming into a bear market and then going lower. Now, does that have to happen? No. What has to happen to invalidate that? We have to get back above 2,221, consolidate, and then we're bullish again. I mean, it's very, very simple. And the beauty of these moving averages and the way that we use these and fib numbers and all that is that when we look at our daily, everything lines up with the weekly. And then when we look at our weekly, everything lines up with the monthly. And then other people are like, oh, I invented a moving average that I like because even though everybody else is using the 200-day moving average, I'm going to use the 180. That way I'm front running everyone. Sure, you're front running everyone, but you're also getting a bunch of false signals. So you're probably buying the top thinking that it's a confirmed breakout, and then it actually just rolls over, or, you know, vice versa, etc. So, I mean, don't try to be creative. Don't try to be... The key with technical analysis is that you're seeing the same thing other people are seeing anywhere in the world. Someone else is staring at a chart, seeing the same thing as you, saying, okay, this is key resistance, that's key support. You know, we're trading inside this range. We're in a bull trend. We're in a bear trend. The more people that see the same thing, the more likely the psychology is to be a buyer or a seller at those levels. Therefore, the more likely you are to be successful if you're following that. And that's what it's all about. You know, it's the same thing with like what we see with all these like trash, meme stocks, all the meme stocks. Okay. You get enough people. Now, are they smart people? Are they dumb people? Are they investors? Are they gamblers? Are they brain dead? Are they geniuses? Are they short squeezers? Are they, you know, whatever? None of that matters. Who cares? You put enough of those retards in a room together, and I mean, they can move the price on some of these like trash stocks. Like, is there any reason that Bed Bath & Beyond should be going up like 100% in a couple of days? No. Does it surprise me that something that went from, you know, $100 to $10 shot back up to 20? Of course not. That's why we don't ever short anything that's under double digits, because you're so close to zero already. You really want to go for asymmetric returns to the downside? Like, it could go back up to 100. That's a 10x, 1,000%. Or it could go to zero, and that's 100%. So you're taking a 1 to 10 risk reward ratio trade. You bet $1, and if you're right, if you bet $10, and if you're right, it goes to, you bet $1. If it goes to zero, you're right, and you win it. But if it goes back to 100, you lost $10. So it's literally the opposite of what we want. We want to bet $1 and win 10, not bet $10 and win 1, or $1 and lose 10, etc. So not cool. But yeah, that's our Ethereum chart. And thanks to TradingView and its awesomeness, we can't actually pull up any more charts. So that is a wrap. So hopefully you guys enjoyed the stream today. Hopefully TradingView fixes its life. I still don't know what the hell is going on with it, but it doesn't surprise me. I mean, it's been trash literally since the first day I used it. It goes through periods where it's not as trash, and every once in a while it does something like useful. But the majority of the time, let's be real, TradingView is complete garbage trash. But obviously, it's a nice product, or I would be using something else. So again, a lot of times I'll call a crypto or a stock or something like that trash. It doesn't mean that I never want anything to do with it again. It just means right now, based on its technicals or fundamentals or, my mood, that I don't like it. Pissing me off. So that's it. All right, so I'm going to jump in the chat here. We'll cut up a little bit, and then we're going to wrap it. This is obviously a little on the shorter side for the streams. Thank God. After that 4-hour marathon multi-day stream from Wednesday/Thursday. So we're at about an hour 36 right now. So did good time here. All right, so Soto says, hey, loud and clear. Cool Sheet says, hey, dog, how dead is this cat? I mean, it's pretty dead, man. I mean, we're at our targets to the upside. We got a little more meat on the bone, but, it's the real question is, like, are we going to stick around and try to eat the cookie? Or do we just scrape that, cream with our teeth and then on to the next? Because, in my Oreo analogy, I don't care about the cookie itself. I just want that sweet, sweet cream. I want those gains. All right? So, can we get a piece of the cookie? Can we take a little bite out of it? Maybe. But I'm just really not worried about, like, if it was a burger, I'm not worried about the bun. I'm looking for all the stuff inside of it. So the bun is that last couple percent of the trade. It's the first couple percent of the trade when you're picking the bottom. It's the last couple percent of the trade when you're picking the top. That's the bun. I don't care about the bun. I mean, I'll eat the bun. It's okay, whatever. But I don't buy a cheeseburger for the bun. I buy it for the meat and the cheese and the, tomato and the lettuce and the ketchup and all. That's what I want. The bun is just a way for me to jam all that into my face. Because I'll look weird if I just pick up a burger patty with hot melted cheese on it and a juicy tomato and a bunch of ketchup and mustard like a savage. No, I need to jam my meal in between two devices so that I can hold it, so I can jam it in my mouth. And that's what the bun is. I don't really give a damn. And I'm not going to eat my burger with a fork like some kind of fucking psycho. Okay? So that's it. That's what the bun's for. We don't care about the bun. We give the bun to everybody else. With a sloppy bun, we throw it to the birds when we're done. That's what picking the bottom is. That's what picking the top is. It's eating the bun and not worrying about, the whole burger that we just got. So, all right. So, Yoda, what's up, man? Good to see you. Hello, everybody. CW says, mash me the like button, broskies. That's right. Smash it up. Appreciate everybody tuning in today. Calma Betty said the crash is coming. Yeah, I mean, resumption of the crash likely coming. I do agree. Big D says, LOL. I know that's right. CW says, my hero is the Flash. And by hero, I really mean the actor who plays the Flash. I'm not really sure who plays the Flash. Or even what you're talking about. I feel like they made a Flash movie in the last couple of years, but I did not see it. And I can't even remember the last time. I feel like there was a Flash in some of like the DC movies, but I can't really remember who it was. But you can be the Flash, but obviously I'm fucking Batman. But I don't even know if I would pick Batman, honestly. I just like the I'm Batman like argument and the funny voices. I just find it entertaining. So, but yeah, I think that's it. We can go ahead and wrap it up there. We had a nice week. I mean, we've been crushing it for like 6 weeks straight now. It's been great. We still have a bunch of trade setups. We went through some stellar trade setups with asymmetric risk reward. A lot of those are not just quick little scalps either. We're talking about positional trades with like 5, 10, 20, even some 50x potential. Now, does it happen? No, they probably go to zero. But if we take enough bets where we either 50x our money or it goes to zero and we do it with correct position sizing, we're going to win because we can take that bet 50 times. And if we're right once, we win. So if we bet on 10 gold and silver miners, we bet on 10 pot stocks, we bet on 10, energy stocks, we bet on, 10 innovation stocks, we bet on whatever, 10 of something else on top of that. We have 50 positions. And if one of those does a 50x, which is crazy and it's probably not going to happen, but if one does, the other 49 positions can go to zero and we didn't lose anything. But what's the likelihood we're going to pick 50 positions and be wrong on all of them but one? Or even 50? We're not going to be wrong on half of those positions because we use our edge. So let's say the opposite happens and we're right on 30 of 50. So we're right on 2/3, which is great. That's awesome, edge. So if we're right on 2/3 of those positions and they average like a 10x, I mean, we crush it because we lose $1 every time we're wrong because we're taking like 10-to-1 risk-reward ratios or 5-to-1 risk-reward ratios or 20-to-1 risk-reward ratios. Lose $1 every time we're wrong, win $10 every time we're right. So if we lose 20 trades, we lose $20. And if we win 30 trades, we win $300. And then when we take 300 and we compare it to 20, I mean, we're crushing. That's what it's all about, because our risk reward coupled with our probability of success gives us that exponential gains. As opposed to if we're taking something that has a lower probability of success, we're taking something that has a lower risk reward, they exponentially hurt each other, and then we end up on the other side of it. And that's not cool. So, but yeah, going to go ahead and wrap it up there. Appreciate everybody tuning in today. Obviously, today is Friday, the August 12th, 2022, about halfway through August, going into the weekend. Could see some more continuation on crypto. We did see that shooting star topping candle on the daily. We also just so happened to have seen a shooting star topping candle on the daily right before the recent pullback on the, what was it, the 30th, and then right before the recent pullback on the 20th. We literally saw a shooting star on both those cases. So is it likely that we'll see the same thing happen again? I mean, it's worth paying attention to. So maybe we see some weakness over the weekend, maybe see some strength over the weekend, but probably when we come back to Monday, we're probably right smack where futures closes today. So, but a little volatility over the weekend, some trash coins pumping, some trade setups playing out. I mean, I wouldn't be mad. All right, but that's it. Appreciate everybody tuning in. Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. It is Friday at 12:47 p.m. Eastern Standard Time. I am Crypto Trend Trader, and I'm out of here. Peace.